Alright, lesson 2, using the chart. Now, lesson 1's done. You've seen the TradingView basics. As I said, have a read over these. Make sure you know them all. They'll come in handy. So TradingView basics has been done. Now I'm going to show you how to use the chart. So we'll add Bitcoin just because it's something that we'll be speaking about quite a lot here. We'll open up the chart, we'll change to the daily, which I've said already to do, and we'll move it to a line chart. So, if I wanted to buy at 30,000, let's say, just for example, then a good thing that I always usually do is you can draw a wee box. So let's say 30,400 to 29,900. This is where you want to buy. So I usually do this because it makes it nice and easy, and you can also do a wee text in it and just call that buy zone. So that indicates any time that the price could come down into this zone, let's say it does, and chills here for a bit, that you should be buying in this zone for it then to go back up. This is your buy zone, and this is an easy way to have a plan, which is really essential when you're investing. Always have a plan, always stick to your plan. So let's say, and this is not advice, this is just as an example, but let's say I want to buy at 30,000, then I would write a zone at roughly about 30,000 where I want to be buying. And if I look on the chart, let's say in 2 weeks and we're in that zone, I have to buy it because I'm sticking to the plan. There's no if, buts or maybes. If you want to buy at 30k, set a zone, buy it when it's there, and believe in yourself, because investing, you can kind of get the investing word for it, and I don't like saying this as a Scottish person, but the investing word is FUD. And let's see, what is FUD? Let's hope something dodgy doesn't come up. Okay, fear, uncertainty, and doubt. And this is something that investors feel all the time. Let's see what FUD means in Scotland, just for... I would have said different. Yeah, so fear, uncertainty, and doubt is a thing that investors and traders get quite a lot. It's when, let's say, for example, Bitcoin goes down to 30,000, and then some news comes out that, I don't know, the UK is banning crypto forever, for example, and then that's some FUD because it's not official, it's just word on the street, and it's often a thing that people use to try and get the price to go lower. Say you want to buy a big massive buy of Bitcoin at 28k. Say this is 2 seconds, I'm getting ahead. So this is player 1. That's his buy zone. This is player 2's buy zone. Right? Player 1 is happy to buy here. But then player 2 starts spreading some FUD to player 1 that the UK is banning Bitcoin. So then player 1 says, I might not buy there actually. He seems like he knows what he's talking about. I'm going to wait and get to his buy zone. Player 2. This is greedy because you've then changed your plan from here to then buy here, which one, you've let someone else take over your investment plan, which you should never do as well. And you've also not stuck to your own plan. You've not trusted yourself. You've trusted someone else and believing that they know more than you, which maybe they do. But at the end of the day, it's your own journey. So try and not listen to other people's opinions too much. I mean, I'm literally giving you opinions on crypto, but listen to mine. No one else's. Kidding. But yeah, obviously stick to your plan. If player 2 says that it's going to go to 28k, there might be a reason why he's saying that. He might want you not to buy so then he can buy down here, or want the market to keep selling off so he can buy. Hopefully that makes sense. It could be a bit confusing, but let's take these two people out of the way. That was a brief introduction of what fear, uncertainty, and doubt is. You'll get it a lot in investing. Like, you never know when price goes to like these moments, or these moments, or these moments when, you know, things drop in the space of a week, like 17%, and you're like, oh shit, we're going to like 12k. That's fear, uncertainty, and doubt. But if you'd bought here and expecting to take profits up here, but you sold here because of FUD, then instead of making a nice 30% profit, you lost 17% just because you got what we would call shaken out of your bags. In other words, you got fudded out of your plan, changed your plan because something else came in. And in Scotch terms, you've shat yourself. So don't do that in trading. Stick to your guns. If it does go lower, see it as an opportunity. If it goes higher, then brilliant, your plan worked. So that's that. Whenever I look at something to invest in, I will always get the little rectangle that I showed you earlier. You can also get it here in shapes, rectangle. And even recently I had like a buy zone around about here, which obviously went really well. But I'm going to try to find that. 2 seconds. Let's see if I can find it. It'll be ages away actually. There we go. Exactly that. A buy zone, a target zone, which is like my sell zone, resistance zone. It just makes things so much easier, because if you just look at like a chart, for example, like this, you're kind of like, let's take this away. You're kind of like, what? Like, what's happening here? It's just lines. But then you make life a bit easier for yourself. You say you want to buy here. Let's say you want to sell up here. We'll change that. This would be me normally doing things. I'll change that to red, because green is a buy, red is a sell. And let's say my resistance zone is here. Okay, so that makes things a wee bit easier. Yeah, so that's something that I do quite a lot. And you'll see that quite a lot in the Discord. If you do see that stuff like this, then that'll hopefully make a bit more sense to you. How to get these targets, I'll show you in another lesson. We don't need to talk about that right now, but I just want to show you how TradingView works and how to use a chart and see a chart. So if we're looking at this from a larger perspective, or a zoomed out perspective, should I say, you always want to invest in, and I think I've said it before in the course, but it's buy low and sell high is the easiest how to invest that you could give to anyone. Really, if you see a chart and you're looking at lines, really, and you can easily say that this is high. Let's say this zone is high, and let's say like this zone is low. There we go. So you've got your high, let's change this. You've got your high zone and you've got your low zone. Of course these can change, and these will change with anything that you look at, but in terms of right now, you should be saying this is where I'd want to be selling, this is where I'd want to be buying. And anywhere in this, if you're long term about things, in reality, anywhere here you should be buying, anywhere here you should be thinking about selling, at least some of your stuff, because taking profits with things, when people show you like how much money they've made in crypto, is quite a big thing for people to say. I've made 100k in crypto, but then you look and they're still in the position. They've not actually sold, so that might go to 120k by tomorrow, or it might go down to like 80k by tomorrow. So they've not actually made it yet. So it's kind of like a bet. Like, you only ever win the bet once the game is over, i.e. the bet is settled, or else you cash out earlier. And I guarantee a lot of people that have bet have had a winning bet, had the chance to cash out, never cashed out, and then lost the bet. That is the same as buying something in crypto and never taking profits, because you have to pay yourself, and that's one thing that investing is all about. You're in it to make money. So when you're actually making money, why are you not taking money? Does that make sense? Anyway, so buying high and selling low. Let's look at something like Tesla. A completely different chart to Bitcoin, as you can see. But if we were looking at this now, you have to look at specific points on the charts. And I always think, like, you can look at a chart and see some little kind of small movements. But if you look at the line chart, which is what we're looking at, you always kind of want to be looking at spikes. Like, say, for example, bits that go like this, right? Because then you can map out that, for example, I'm using a horizontal line here, by the way. You can see that from here. A horizontal ray, sorry. You can see that this is an area that you'd be interested in, because that is classed as resistance. And support and resistance is quite an easy thing to understand once you get it, once you can start identifying it. I'll show you a video to go and watch right now. I'll put it in this anyway. It's here, small video. It's explaining support and resistance. I think it's like a 10-minute video. Will hopefully make you understand a bit more what I'm talking about. If you don't know what I'm talking about right now, go and watch this and then come back to see this. But support and resistance is an easy thing to understand. So you would identify this as a level of resistance. And to do that, just like your buy zones, I like to do a line on it. So let's see. In fact, I'll draw one out because that looks a bit confusing. I'm just going to draw out this little chart, and then we'll identify. There we go. That is a very messy chart, but we can break this down by saying, and I'll show you, for example, some supports and some resistances. So if you're looking at that, you would probably say you had resistance here, right here, because if you watch the video, you'll understand what resistance is. So I'm assuming that you've watched it now. If you've not, as I said, go and watch it right now, because you're going to get lost if you don't. So this is resistance because you've rejected at this level here. You've rejected at this level here. So that is a level where you would draw a line on it and say that's a level where price is changing. And that's what you need to look at support and resistance as. You need to look at them as levels where the price goes, where it either turns around downwards or upwards. It either turns back on itself or else it bounces up from there. So here it's turned back on itself twice. It's hit resistance and gone down. It's hit resistance and gone down. Okay. And then the same again. I didn't draw it too well, but you could probably say this is now testing it as support. So when you flip a resistance level, sorry, I'm trying to make this as clear as it can be. Let's say this is your resistance level. There we go. When you flip a resistance level, let's say resistance, 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 breaks through resistance, support, okay? And that's now your support level. You break through it again, it becomes resistance. You break up through it, it becomes support. and usually from support you'll go up, and usually from resistance you'll go down. This is how you use these levels to your advantage. And we'll go back to the normal one. So, came here, as you can see right there, and that is it using the resistance as support. You could also probably say that this new line, let's take this line away, and if I'd drawn this better, this would all be accurate. In fact, you know what I'll do? Because I've kind of made the drawing a wee bit bad, let's draw a resistance and support zone. Oh. I have no idea what just happened. 6. A resistance and a support zone. So this is where price will usually do something, whether it goes back up from it or comes back down from it. So this is your main zone where it decides whether it's resistance or not. So here, resistance, resistance. Here, support, support. Here, tried to use it as support, couldn't. Used it as resistance, and down it goes. That is a very common thing. And this is more trading, but you also kind of need to know this for selling and also buying things in the long term. And it's a lot easier to look at on the daily chart, which I'll easily identify some things for you. Oh, apologies. It was a long day at work today, so I have every right to be tired, especially on a Thursday night at 25 to 9. Yeah, so used it as resistance, goes down. Here again, used it as support and goes up. So hopefully that makes a bit of sense on how you need to use these levels and you can identify them. And I would advise you to load up a chart, and you can send me them if you think they're to evaluate them. Imagine this is some homework and I ask you to load up a random chart and draw some support and resistance lines. And you can send them in the Discord here in the general chat, and you can send me and say, for example, is this correct? And I will go for the chart and make sure it is and not, and make sure you're getting it. But I'll do a quick example here. Tesla, we're looking for support and resistance. So I would say first off, okay, here is a support line, which was tested here as resistance first. So it's very small. It disappeared. It was tested there as resistance first, then tested as support, and then up it went. And then it came down, what's that, 2020, 2023, 3 years later to test it as support. This is why you need to map out these lines, because if you said to yourself, right, I'm going to buy, let's say this is the only chart you saw on it, you said, I've identified this support and resistance line, I'm going to buy whenever it goes back down to here. There you go, 3 years later, or 2.5 years later, it comes down, and you're currently up 100% from your Tesla buy. Even from there, and max time, you're up 170%. So this is why you need to test out and write out support and resistance zones, because this is how you make money. You can buy, as I said, in general, when things are lower. Like, you'd probably say that this is low for Tesla. This is your low zone, so anywhere in here is probably a good buy, in my opinion. But if you can map out key zones, then look, bang on the money. Literally comes down and goes straight up. Like that, literally hit the support zone, and within a month you were up 90%. That is obscene for stocks, but that's the power of just marking out support and resistance lines. Again, we have another one here, just above here, where the price has rejected it here as resistance, used it as support here, and used it again as support here. And you could potentially see that coming down and testing it as support again in the future. So there's another one. And this is really easy to do once you start getting the hang of it. Here's another one which we could very well see in the next few days. We're quite close to it. And you never get it perfect on the line. Like, it's not a resistance line, it's always a resistance zone, but I just draw the line because it makes it a bit easier. So here you had support, kind of resistance, kind of messing around here a bit, and potentially again you'll come to use it as support or resistance. We'll see what happens in the next few weeks to months, but that's another line. And I'll do one more just quickly. Let's say, as I said, we'll use this one as a zone. So we'll say this here, this kind of zone, is seen as a resistance zone. So, I mean, it was a support as well, but right now it's probably a resistance zone. So, used as resistance. 1, used as support in here. Kind of used it as support / resistance. Used it as resistance. Used it as resistance. So how to do these things is you need to map out, for example, with this. As I said, it's zones. So let's do this. And you need to be wanting to buy in these zones. As I said, let's do it with buy zone and a sell zone. So this is simple investing here, and this is where you should be looking over the next few years, over the next few months, whatever, to maybe be buying in these zones. Of course, you'll get events where it goes right down, buy it, but you also have to say, well, there's another resistance zone, so if it gets to there, I'm going to keep some money, and if it touches this zone, then I'm going to buy more. That's how you kind of even out your buying price. But you have to be saying, right, here it goes in a buy, here it goes in a sell, and that is, say you bought here and you sell there, 81%, which in stocks, as I said, is pretty obscene, especially in quite a short period of time. For example, if you bought here, sell here, 90% in the space of, I'll get that exact, in the space of 80 days, which is what, 2.5 months, 90% in the stock market. Not very common, but if you look at the chart, it's quite a lot, and you do these simple things like mapping out buy zones and sell zones, it happens a lot. I mean, obviously the stock market averages 10% a year. It doesn't mean that you're going to, things like Tesla are only going to go up 10% a year. And that's on average. There's sometimes where, as I just showed you, they can go up 90% in 2.5 months, or they can drop, I don't know, let's see, they can drop 65% in 100 days. So these are things you need to be wary of. Of course, 10% on average on the stock market, but individual stocks can move a lot more. And it's the same with Bitcoin as well. So that is a quick way to map out things in terms of supports and resistances. And I'll follow through to this on buy zones and sell zones, which I've just done already, and also how to kind of identify them a bit more. So hopefully that helped. Any questions, as I said, let me know in the general, and I would advise you to map out some buys and sell zones, and just play around with it and get used to it, because it is really essential for any simple investor to have these zones and then know when to buy, make a plan and execute it, and just sit in your arse and make money. Simple. So yeah, I'll see you in the next lesson.